Good morning, everyone. I'm Vince Lansing, and this is the GoFix Market Rundown. Thank you for joining or watching. It's Monday, 8:26, running a little bit late. We have mostly catching up over the weekend and what to look for in terms of priorities this week. And of course, we'll go through the markets. There's the homepage. We had 9 stories out over the last 3 days, and all of them were on topic. You pick what you want to read. There's a lot there. 10-year yields are up 1. The dollar is up 41. S&P 500 is up 28. The VIX is unchanged bid. Gold is down 33%. Silver is down 1.5%, 57 cents. Copper is down 1% as well. WTI up 46. Natural gas down. Bitcoin down. Palladium down. Platinum down. Gold, silver up, and all the grains are down. Corn getting shellacked, popped. I don't know what you call it, but it's not good. Okay, so describing the drivers of this market today, it's a mixed bag. So we'll cover that in the news itself. But there's the front page. Let's go right to the stories. What we're going to be talking about today is what happened over the weekend, the key event to look forward to this week if you're trying to handicap events, and a new report by the World Gold Council showing a surprising uptick in central bank gold purchases. So we're going to start that right now. First, over the weekend, right? Those were the drivers we were talking about. The big thing was Trump signs the one beautiful big bill. President Trump signed OBB into law while Elon Musk launched the America Party with a focus on freedom, fiscal discipline, and tech. The party seeks influence in Congress despite the entrenched two-party system. The bill, we have that covered extensively in terms of the effect it has on markets, as well as our deficit in the HeartNet post, which was very popular this weekend. Next, over the holiday, OPEC increased output. Global equity markets opened softer. They're higher now after last week's highs. Brent crude dropped to $66. It's back up now following an unexpected OPEC plus production hike of 555,000 barrels per day, above forecast, as the group seeks to reclaim market share. Keep in mind that the Saudis have all the excess capacity, relatively speaking, to their partners in OPEC, so they can pump more anytime they want. Now, moving forward, what we have to look forward to this week, there's really not a lot to look at except for the one thing, and I think the markets will key on that a lot, and that's the tariff negotiation deadline on July 9th. The U.S. July 9th deadline for tariff agreements is driving market focus, with duties set to take effect August 1st for countries without deals. India, Japan, and the EU are still in talks, but tensions are rising, especially with Europe. Escalating trade tensions and retaliation are also in the news. The U.S. is threatening 17% tariffs on EU food exports and 10% on BRICS-aligned countries. China is also retaliating against Europe, believe it or not, because of the car debate they're having. Before I read the next one, 10% BRICS-aligned countries. That's a long way from 100%. Matt O'Reilly noted that this morning when Trump said he would threaten 10% on BRICS-aligned countries, undermining the dollar, et cetera, et cetera. Well, about 3 months ago, maybe 2 months ago, Trump said it was 100%. So whether you think Trump is backing off or not, it certainly looks like he is. I'm noticing a pattern in his behavior and his actions versus the headlines. His headlines are less tariff-oriented. He doesn't want tariffs in the news. The word tariff, do a search for it. It's dropping. Conversely, while his talk of tariffs in the news as a bragging point has slacked off, and his numbers publicly seem like he's, giving up, his conversations privately are yielding tougher numbers than I thought that we would see. So here's what I mean. First of all, let me get to that. That's Vietnam I'm talking about. But right now, Trump may not extend the tariff ceasefire as markets hoped. Vietnam deal kind of sucked for Vietnam. I wrote. So he's seemingly hardlining things a little bit more. So when he comes out and says, as he has recently, I may extend them, I may not, as opposed to saying, I'm going to, hammer people that like the tariffs are coming back. He's not threatening the tariffs in the news anymore. He's soft pedaling them. And I think he doesn't want a big downtick in stocks, which came along with a popularity hit. So if you're pro Trump's policies and his approach, take heart to this. He's talking soft publicly and negotiating tough. That's what Vietnam is telling me. If you're not happy with Trump's policies, well, he's backing off. So we'll find out which of those sides of the coin is right on July 9th. If he extends them, if he doesn't extend them, chances are they'll be extended in some form, maybe in a case-by-case basis. Who knows? But moving on to the next story, which I think is pretty important, that is, there was a surprise uptick in May central bank gold buying. Central banks added a net 20 tons to global gold reserves in May, marking a slight increase from April, though the broader pace of accumulation remains tempered. That's the World Gold Council. But it wasn't a slight uptick. It was a surprise uptick. They expected that trend to continue lower. So I think the wording here is a little bit throwing water on a gold rally. I don't think they're phrasing it realistically. It doesn't have to be bullish, but it's not bearish. The National Bank of Kazakhstan led the activity with 7 tons of purchases, followed by Turkey and Poland at 6 tons each. Singapore's MAS reported a 5-ton reduction. Okay, it's probably because they were selling it to China. I'm not joking about that. There's a chart. Central banks continue their broad accumulation of gold in 2025. The next part of that is HSBC. Oh, wrong chart. HSBC signals there's more buying to come. According to HSBC's 2025 Central Bank Gold Reserve Survey, 43% of central bankers expect their own institutions to raise gold holdings, with 95% forecasting broader reserve growth. OMFIF's Global Public Investor 2025 echoed the trend, with 32% projecting increased gold purchases in the next 12 to 24 months. So the first paragraph is, yeah, they've been backing off, but the backing off is not as backed off as they've been saying. I'm not trying to pump it up, I'm just telling you how it is. They err conservatively. Over the weekend, we had that many posts. I'm not going to go through all of them, but I'm going to give you a one-line summary in case you have interest, as many people have. HeartNet, we just got a bigger bubble. That's the effect of Trump's bill and budget passing and how it shows a pivot from Doge isn't going to work, so I'm going to spend more. Second, why is China acquiring gold so discreetly? One word, one sentence answer, they're not done buying. They want it cheap to buy more. That's a response to a Ross Norman piece, which implicitly asked the question, why are they buying so discreetly, even sneakily, if that's a word, if you can imagine it. The next piece, that's the piece we featured over the weekend. China will be the world's gold trading hub soon. That's basically empirical evidence that COMEX is dying. So if I put the title, COMEX is dying and China is growing, that would probably be the most popular post over the weekend. But that's effectively what we're saying there. COMEX is dying, China is taking center stage. I might change the title to that. Turkey has 311 billion in untaxed, unseen, and untracked gold. Pretty cool culturally to look at that. And there's a bunch of other ones there. But I want to just for a second mention the JP Morgan stablecoin analysis. As gold people, you may not be focused on that. And I understand that. But you should be. Because that's where the puck is going to be. What do I mean? If gold is the cure to what ails us about money in the world, hard money, soft money, crappy money, then stable coins are the delivery mechanism of that gold. Gold is the medicine we need to take. Silver, Bitcoin, anything but fiat is the medicine the world needs to take to get more responsible. The form that it's going to be digested and consumed more easily by the world is stable coins. The pill that has the medicine in it, the pill is a stable coin. If you were interested in making money on an asset, you'd want to know who was using that asset. Well, stable coins are an industry that will be hoarding gold for crypto use. Whether it's real or not, it's not the point. It's more real than ETFs. If you want to know how much gold is being bought, wouldn't you want to know who's making the delivery of the gold? Stable coins become a vault for gold going forward. Just saying, it's going to be a big deal. Picture a money market that you get 4% in, but it's also tied to gold. That's what stable coins can be if they're used properly. So it's in our interest to know how stable coins will be put in effect. On top of that, that analysis is very heavily focused on Hong Kong. Hong Kong is really coming out of the box on stable coins. What else is Hong Kong doing? They're adding to their vaulting for gold. Gold vaults, gold in the vault, stable coins, the cure, the delivery mechanism. That's it. So I would say if you're interested in where we're headed, you want to learn a little bit more about stable coins. Coming this week, we have a special report. We've seen a special report on student loan defaults. It's something like 45% of Americans, 45 million, not 45%, 45 million Americans have student loans, and a big portion of those might default. Korea's gold trading volume explodes. Buy silver, sell platinum, says the bullion bank implicitly, but we're right in saying that. And HSBC, a lot of people have been talking about, not a lot, but it's been touched on. HSBC says gold's going to back off. Citi has said it. HSBC jumped on it, and you see these little news wire items, but no meat on it. So we're going to drill down on that report.